is a potential for a reintroduction of the gold standard, or perhaps have the advent of cryptos changed the debate?
Well, I think it's all potentially changing the debate. Now, there was a brief moment early after Trump's victory when people realized that several of his close advisors, including Vice President Pence, were on the record saying they had a lot of sympathy for the idea of repegging the dollar to gold at some point, and would seriously consider the issue. It has not been seriously considered since during the Reagan presidency. Reagan's Gold Commission looked at that possibility. And one must ask themselves the question, placing yourself on a gold standard basically removes the ability of the central bank to create money to bail out banks if there's a financial crisis, or simply to bail out the economy more generally if it gets stuck in a severe recession. And so it's unlikely that politicians would willingly choose to wear golden handcuffs, or a more invidious analogy appropriate for those who disparage of politicians is to put on a golden straitjacket because they're insane, right? So you put on the golden straitjacket and then you can no longer manipulate the money supply. And of course, that's how the bulk of the world ran, the developed world. That's how the bulk of the developed world worked during the 19th century, in particular the second half of the 19th century, following the unification of Germany, which catalyzed the somewhat formal development of the so-called classical gold standard system. Now, it was under that classical gold standard system that the Western world, according to essentially all credible economic historians, experienced its most rapid growth ever in per capita terms, not just in population terms, in per capita terms. So, that mainstream economic argument that going back on a gold standard would result in slower economic growth it's nonsense. It's complete nonsense. These people have never looked at history.
But is it likely?
Yes.
Yeah.
And the reason why is this. The reason is that because the world trades with itself quite a lot, right? The world is more dependent on international trade today than it's ever been. Everyone's exporting, everyone's importing. Of course, there are some countries, like the UK, for example, that import considerably more than they export. And as a result, foreign countries accumulate sterling assets in exchange. The United States, the provider of the dominant global monetary reserve, the dollar, is also a huge net importer. And so it has this massive net foreign debt position vis-a-vis the rest of the world. Well, the thing is that if the US and the UK and other net importing economies remain stuck in this situation where A, growth is weak in a sort of historical comparison, banking systems are still over-leveraged in a historical comparison, and yet they just keep keep importing and importing and importing. Their foreign creditors beyond a certain point are going to think, we have too much sterling, we have too many dollars, we're going to start exchanging some of that for gold. Well, guess what? Turkey's already doing it. China's already doing it. In fact, nearly every major net exporter in the world has been a net accumulator of official gold reserves over the past decade. Why? Because they are they're voting with their reserves, right? And they see the writing on the wall. Now, does that mean that they will, on a nation-by-nation basis, want to place themselves back on a gold peg, a gold standard? Not necessarily. But if you look at the international system as a whole, for every one country that decides to accumulate more gold reserves, someone else has to accumulate more dollars and more sterling, and they may not want to. And so it's a non-linear dynamic. And for those who understand game theory, when you get into these non-linear dynamics, they can reach a tipping point very suddenly and unexpectedly. And in my book, The Golden Revolution, I explore very precisely how gold could, in a very short period of time, subject to just a few decisions by a few countries, be de facto remonetized at the international level as a way of settling these huge accumulated cross-border imbalances. Now, that may be a bit too much economic jargon for tonight, but the idea is that if you combine what you can observe in economic history, what you can learn from game theory, and if you apply it to contemporary international economic and monetary relations, I think there's a very persuasive case to make that the world is going to remonetize gold, at least at the international level, in a way that substantially supports demand and pushes up prices, other factors equal, potentially by a very, very large amount.
And how long do we have to wait for that?
Well, you can't time things like this, right? You cannot time things like this. However, if you look at history, if you look at history You can see some things as a guide, and I think it would be exceedingly unlikely if we're going to get through another full economic cycle before some of this begins to play out.